Maybe I'm a little bit crazy, but hear me out on this. If you're thinking about buying or selling a home right now in San Antonio, there's a good chance that you've already typed up Zillow and checked out the estimates and looked at the nice looking graph that you saw there with all those many colors and try to figure out if prices are going to be going up, down, sideways, or they're just going to be trying to poke your eyes. And Zillow isn't useless. There's some real helpful data in there, but here's the thing. Zillow is an algorithm built for the nation. It does not know specifically what's happening in the streets of Converse, the streets of Tranquil Road or Culebra Road or any other road that you know on there. It doesn't know certain school districts are moving within a week while other homes that sit across town are sitting for 2 very long months. Today, in this market update, we're going to be talking about with a twist. There's going to be certain numbers that we're going to be running through. There are Zillow numbers and forecasts about what's happening here in San Antonio. Then we're going to layer them down with the Sabor data. That's the San Antonio Board of Realtors, and get some on-the-ground experience that tells us something that Zillow cannot do at all. If you want a real estate picture of what is happening in this market right now, you need both informations. By the way, hit that subscribe button right there. You see it, this one right over here, so you can stay in the know. The San Antonio Market Snapshot, the raw data right now in 2026. Let's start with the baseline. Before we can predict the future, you need to know what the market is standing right now in 2026, because a forecast only makes sense relatively to the data that start to a starting point. The median price in San Antonio metro area is sitting between the low to mid $280,000. That's down from the pandemic peak of roughly $310,000 to $350,000 hit in mid-2022, and it's been relatively stable range for the past 12 to 18 months. It's not in a free fall, it's not surging, it's in a real stabilizing phase right now. Active inventory has improved significantly from the pandemic era lows when we had less than a month of supply. Right now, in the San Antonio is tracking somewhere between 5 to 6 months overall, shifting more toward a balanced or buyer-friendly state that is characterized by rising inventory, lower sales, and 102 days average on the market listings as of February 2026, becoming a dramatically better environment for buyers than in 2021 or 2022. Days on the market has been stretched out versus the single-digit days on the market we saw in the peak frenzy. That number varies a lot by price range and neighborhood, and which we'll get into in a little bit. The data point. San Antonio's metro price in the low to mid 280,000s. Inventory is a balanced market right now, leading to a buyer's market. Market status stabilizing, not crashing, not surging. What Zillow data says about San Antonio home values right now. Okay, let's look at the Zillow actually shows for San Antonio. The Zillow Home Value Index, which is the measure of a typical home value in the market, places San Antonio Metro in the 280s to 290 price and $290,000 price range for a typical single-family home as of early 2026. That tracks reasonably what Sabor's medium price data shows. So the headlines to the number, Zillow isn't far off. The data does show what's happening over the past a few months or a few years. It's a significant run up through 2021 through mid 2022, followed by a decline, then a flat. That chart shows San Antonio roughly between 8 to 12% below 2022 peaks, which again is consistent to what we see in local transaction. One thing Zillow does reasonably well is showing a long-term trend line, and what that trend line shows to San Antonio is its consistent appreciation over the past decade, a pandemic spike, a moderate correction, and now a plateau. That's not a market crisis. That's a market digesting a period of unusual appreciation and finding its floor. Zillow Home Index for San Antonio is approximately 283,000 to 290,000 for a typical home. Year-over-year change per Zillow, roughly flat to a slightly negative. It's minus 1% plus 1% range depending the exact month. The index shows stabilization, not decline. Now let's look at the Zillow's 12-month forecast for San Antonio and how to read it before you make a decision and either buying or selling a home. This is the part that people really want to know. What does Zillow say what's coming up next? Zillow's 12-month forecast for San Antonio metro area as of early 2026 is projecting a modest, roughly flat, slightly positive appreciation, somewhere in the range between a 0.5% to a 2% growth over the next 12 months. That is not a dramatic call in either direction. It is essentially the market is stabilizing and grinding slightly upward prediction. What is driving this forecast? Zillow's model is incorporating continued population growth for San Antonio or in San Antonio, relatively constrained inventory, a stable environment anchored by the military and healthcare sectors, and the assumption that mortgage rates will remain elevated, high, but not spike dramatically. Zillow's not predicting a crash. They're not predicting a boom either. The forecast is essentially San Antonio in 2026 market is going to be in equilibrium, growing slowly and not going anywhere dramatically, either declining or going up. Zillow's forecast once again is 0.5% to 2% home value appreciation. Not a bold call, and model expect slower grinding stability, consistent market digesting past appreciation and waiting on rates relief to unlock the next move. Zillow's forecasts are based on historical patterns and macro inputs. They do not know about the new highway interchange opening up in 2027 that will make submarkets significantly more accessible. They do not know which specific school district is about to get a new elementary school. Local context matters in ways a national algorithm cannot fully price in. Now, where Zillow's algorithm gets San Antonio right? Let's give credit where credit is due. There are things that Zillow data captures well about this market right now, and we want to make it balanced about this so you can be in the know. The overpricing trend is reasonably accurate. The pandemic run-up peak of mid-2022, the modest correction, the stabilization, Zillow's charts tell that story correctly. If someone wants a bird's-eye view of San Antonio homes value have done over the past 5 years, the Zillow index is a reasonable place to look at. Now, the population growth and demand fundamentals. Zillow's model gives weight to population growth as a driver of housing demand, and San Antonio continues and in-migration is real and is genuine floor underpricing. The algorithm is right to incorporate that information. The employment sector stabilizing factor. Zillow models recognize the San Antonio military and health employment base reduces downside risk compared to markets with more cyclical employment. That shows up in more muted connection forecasts for San Antonio relative to metros or other cities where more tech or finance concentration. Now let's look at the local take on a macro trend direction of prices, role of employment stability, population growth as a driver. Zillow is broadly right about San Antonio. The headline numbers align well with Sabor's data. Use Zillow for macro content, does not use it for street level decisions. Now, where Zillow algorithms get San Antonio wrong. Now let's do the honest part. Here's where Zillow's view of San Antonio misses the real story. Zillow treats San Antonio as one market. It is not. It is a dozen distinct submarkets with dramatic different dynamics. A 3-bedroom home in the North Independent School District, priced correctly at $270,000, is still genuinely multiple offer situation given going under contract in 2 weeks. A 3-bedroom home in a similar size in a weaker school district on a busy road at $290,000 is going to sit 60 to 90 days. Zillow's single metro index does not show that split. Estimates on individual homes can be significantly off. We've seen Zillow estimates being between $20,000 to $40,000 above or below what the home is actually sold for. Zillow itself has acknowledged estimates accuracy limitations. Their error rate in markets like San Antonio, which has less transaction density than major coastal metros, is higher than the bigger markets. Zillow can't capture off-market dynamics, sellers' motivation levels, or the impact of specific local factors. A new development going nearby, drainage issues in the subdivision, a school district redistrict announcement, that can meaningfully move individual home values in ways the algorithm never ever sees. Never use Zestimates as a substantial or a substitute for comparative market analysis from a local real estate agent. The Zestimates is a starting point for curiosity, not a pricing tool. We've seen sellers overprice based on Zestimates and stay on the market for months, and buyers lose deals because they did not underestimate that Zillow estimates were wrong. Now let's look at the inventory. The metric Zillow cannot fully capture. Here's a market metric that matters more than almost anything else right now. That Zillow Home Value Index does not fully convey. Inventory, specifically the uneven distribution of inventory across the San Antonio city or the San Antonio metro. Overall, active listings counts have improved substantially from pandemic lows. We're sitting on 5 to 6 months of supply range, as I mentioned earlier. That sounds balanced, like a balanced market, but the average is being distorted. The entry-level range for homes under $270,000 that are move-in ready in desirable school districts. Inventory is slightly very thin in those markets. Homes in that segment move faster. Buyers compete in that price range need to be prepared to move quickly and come in with a strong offer. That $300,000 to $400,000 range inventory is more plentiful. Sellers in that segment are more negotiable. Days on the market are longer. Concessions are more available. That's a meaningfully different buyer experience than the entry-level segment. New construction has added inventory meaningfully in outer ring communities. Converse, Shirts, Zillow, the far northwest side, and builders are actively incentivizing buyers to absorb spec inventory. That supply is a real factor to keep the broader market from tightening backups. Now the data point. San Antonio's inventory is in the entry level in the $270,000 is still tight and competitive. $300,000 or $400,000 range has more cushion and more negotiating room. New construction in the outer rings outside 1604 have a meaningful supply with builder incentives. Now let's look at the days on the market and sellers' concessions that are being offered right now. There are two metrics that tell you more about what the real power shift in this market than almost anything else out there. Days on the markets and sellers' concessions. Let's look at both. Days on the market has stretched out considerably from the frenzy a few years ago. The citywide average is around 60 days on the market, relatively showing a meaningful shift from the 5 to 10 day market average that we saw in 2021. Buyers now have time to think, time to do a proper inspection, time to negotiate that was generally not available in the market a few years ago. Seller concessions have come back in a significant way. Closing cost credits, 2-1 rate buy-downs, home warranties, repair credits after inspections. These tools are routine again in 2026. The seller's 2-1 buy-down on a $285,000 home can reduce the buyer's or your interest rate by 2% on year one, saving you between $300 to $500 per month. That's a real financial benefit that did not exist at the market peak. Zillow's forecast does not explicitly call out concessions on this environment, but buyers operating with this in market, it may be the most practical, valuable thing right now to understand. Some opportunities for buyers who know how to ask for sellers concessions in 2026 as we enter the market that with averages that 2021 buyers never had. Ask for a 2-1 buy down, ask for closing costs, ask for credits, ask for home warranty. In the current environment right now, motivated sellers are going to say yes. Here's an insider tip. On a listing more than 30 days or more on the market in San Antonio, treat it as a negotiating signal. The seller has been waiting. A confident, well-structured offer with reasonable asking price for concessions often gets a very different response than the offer on a fresh listing or a listing that was just listed a couple of days ago. Now the mortgage rates and affordability, they're variable driving everything right now. No market analysis of San Antonio in 2026 is complete without talking about mortgage rates, because rates are a significant bigger variable right now shaping everything else in the market. The 30-year fixed rate has been hovering in the mid to upper 6% range through the first part of 2026. The rate environment is the primary reason transaction volume is below historical norms and the primary reason so many current homeowners aren't selling. They are locked into rates from 2020 or 2021 and they don't want to give up on it. The rate question on everyone's minds, are rates going to go down? Zillow forecast assumes rates are just going to stay elevated. The moderate appreciation forecast is built on assumption that rates relief is gradual, not dramatic. Most major forecasts see rates drifting toward the mid-sixes for the next 12 to 24 months. If inflation continues to moderate, hopefully it goes down, but no one's predicting the return of 3% interest rate. The consensus rate outlook for 2026 into 2027 is gradual increase or hopefully going down to the 5%, not a crash. The implications for San Antonio are rates ease, buyers' demand surges, inventory gets absorbed, and prices move up faster than Zillow's current forecast implies. Buyers waiting for rates to drop before entering the market are making a bet. If rates drop significantly, buyers' demand typically surges and inventory tightens quickly. The buy now and refinance later strategy, lock in a home at today's prices before competition returns, is the approach many experienced buyers are taking right now. Now looks at the San Antonio submarket Zillow treats as one market. This is an important local context that can add a top of Zillow estimates metro level view. San Antonio is not one housing market. It's a collection of submarkets with meaningfully different supply, demands, and pricing dynamics. The Military Corridor, Converse, Universal City, Schertz, Live Oaks, areas around Randolph or Fort Sam continue to generate consistent demand from VA buyers and military families. Inventory in these corridors is tight at affordable price ranges. VA loans activity here is strong. The North Side Growth Corridor, Stone Oak, Encino Park, Timberwood Park holds value well because of school districts, quality, and employment proximity. Prices here are more resilient and days on the market is shorter than the average San Antonio metro average. The Northwest Side, which is Lotus, Leon Valley, Alamo Ranch, has seen new construction added inventory, which has lengthened days on the market and has created more negotiating room. Buyers in these corridors have more options and more leverage than a few years ago. The south side, the southeast side, offers the most affordability in the metro and the most value for price per square footage for buyers. These areas have historically lower appreciation rates and serve a real estate segment effectively. Do not let Zillow metro level forecast determine your expectations for a specific neighborhood. The north side, the military corridors, are performing significantly better than the metro or the San Antonio metro on average. The outer south and some mid-priced suburban segments are softer. Location specifically matters enormously in San Antonio. Now, what all of this means for buyers in 2026. Here's the practical translation for buyers like you that's looking for a home. Zillow says that markets is roughly flat. We say flat at metro levels, but real variations underneath. And that variation creates opportunity if you know what you're looking at. The market is giving buyers more time, more choices, and more negotiating room than it did at any point in 2019. Sellers' concessions are real and available. Days on the markets give you breathing room for proper due diligence. The rate environment is difficult but manageable, especially with builder incentive programs, seller paid buy downs, and the realistic expectation of refinancing when rates become lower. Entry-level buyers under $270,000 still have to move with urgency and well-priced homes in good school districts. Move-up buyers in the $300 to $400 price range are in a general better negotiating position. Some opportunities for 2026 is one of the best buyer segment environments San Antonio has offered in several years, not because prices have crashed, but because negotiating power has returned. Buyers who are prepared and with good reputation are getting deals done at favorable terms. Now, what does all of this mean for sellers in 2026? For sellers in 2026, market requires precision. Zillow's prediction of flat, moderate appreciation means you cannot count on the market to bail you out if you overprice your listing. Homes are priced right and presented well are selling. Homes that are priced based on 2022 comps or inflation rates, Zillow are sitting 60, 90, 120 days on the market, and the ultimate selling for less than what they would have done if you priced it correctly on day one. Buyers for selling concessions as are no more part of the net process calculation. Closing cost credits, rate buy-downs are now table stakes in many price ranges. A seller who goes in expecting negotiating zero concessions is going to be frustrated. Sellers who price accordingly from day one, present the home well, and come into the negotiating expecting to offer reasonable concessions are moving homes. Sellers who do not are assuming days on the market and is eventually capturing to lower offers they did not have gotten from the start. Whether you're buying, selling, or just trying to figure out what this crazy market means for your situation, your family, reach out. Link in the description below. No pressure, no pitch, just a real conversation about what's happening to you. Also, don't hit that subscribe button right now so you can actually get weekly updates. We keep the data current and with zero spin on it. Thank you for watching. I want to hear from you. Are you checking out Zillow on San Antonio homes right now? Have you seen estimates that seem a little bit off? Drop your comments below. I would love to hear about some really crazy stories that you've seen as prices being off. Also, please don't forget to like, share, and subscribe. Subscribe button's right there. You see it? This one right over here.